In this week's podcast episode, I talked to the founder of CryptoMatter.com, Dr. Glas, how he brings traditional finance into the crypto world.
We have data on developer activity, we have data on Reddit activity. You could also say that all the people on Reddit who are the social network of a coin or of a crypto project could also be termed something like a value indicator.
On today's podcast episode, I'm happy to welcome the founder of CryptoMatter.com. He worked as an absolute return portfolio manager at Glas, and I'm happy to welcome you on today's podcast episode.
Hi, Sebastian. Thanks for having me.
So my first question is always, who are you and what do you do?
Yeah, that's a very general question. But let me introduce myself. My name is Tobias. I'm from Munich, in Bavaria, obviously. And yes, I'm very active in the digital asset space, in the crypto space. And that is also what I'm doing. Like, I'm the co-founder and managing director of CryptoMatter.com. So it's basically a web page, crypto-matter.com, which focuses on cryptocurrencies, digital assets, data especially, and also analysis and tools to do or to cover the full investment process for retail and for professional clients.
That is very interesting. And I'm asking myself, when was the first moment where you got involved with cryptocurrencies? And was there a particular moment where you fell into the rabbit hole?
The first moment was in 2013, and back in the days, it was during my bachelor studies. It was the time when Bitcoin, the first time was like a bull market, or for me, it was the first time, obviously. So Bitcoin went up to like $800 or so, and that's when I got interested in digital assets. And at that time, the crypto space was very small. So just a few coins, not like today where we have more than 20K different coins. But back in the days, 2013, it was clearly less. And at that time, I was also a cooperative student at Bayerische Landesbank in Munich. And I had some kind of a first trading background. And I noticed when starting in crypto or looking at crypto that there are arbitrage opportunities between different exchanges. And so the two friends of mine who were really good IT guys, like programmers, and we started together a arbitrage bot where we connected to different exchanges. Like I think it's 4 or 5 exchanges at that time, where we actually arbitraged Dogecoin. And that was pretty successful until, in the past, so 2013, it was like really the Wild West in crypto land. And the bot ran for some time and we made good profits. But so for us, it were the first steps into arbitraging coins, and also the first steps into crypto and everything. And we made some mistakes. And to cut the long story short, at the end of the day, we managed because the exchanges have been hacked, and we lost a lot of money. But at the end of the day, we managed to get out of the crypto space flat. So we didn't lose or we didn't gain any money. But we learned a lot in programming, obviously, and how crypto markets work, and also in setting up such a bot. And it was a very fun time. But in 2014, so it was like, I don't think it was a year we ran the bot. For me, crypto was like, okay, if I can't do, because the exchanges sent data via API, but the data was sometimes it was old or it was not reliable, and you had to do a lot of workarounds when setting up such a bot. And so I decided with the experienced that exchanges can get hacked, or we had one exchange where the founder just took all the money on the exchange and, I don't know, bought some Caribbean island or so. And for me, that time was like, okay, it's not yet the right time to go big in crypto, because it's just not the right infrastructure. And so I somehow lost focus in crypto, or on crypto. And but then in the meantime, between 2014 and 2017, I was working in different roles in asset management and banking in Germany, especially in Frankfurt and in Munich. And yeah, in 2016, I kind of had the feeling that I don't understand financial markets to the extent that I wanted to understand. And therefore, I went back to university, pursued a PhD in finance. And at that time, it was before the bull run in 2017, I somehow remembered cryptos, so the crypto space. And I had another approach then in that time, where I didn't construct like a bot or anything, trading bot, for example, but where I focused on actual financial research and got all the data of the different coins, because in 2017 we had like a lot of more coins. I think it was like 2000 coins or so in 2017, before this ICO thing and every bull run. So at the very beginning of 2017, I gathered the data, did some first calculations and research. And what I noticed then is that because the first, or the standard procedure when starting in a new field is that you look at results of other researchers, what they found out, and like, for example, equities or so. And then I try to do similar analysis in crypto. And I noticed at that time that the results in crypto are totally different to, for example, equities. And that was the time when I kind of fell into the rabbit hole, because it was like a totally new space is opening up. Nobody has looked at it before. So I think I'm one, or was one of the first crypto researchers at that time, going into asset pricing and investment strategies and everything. And obviously the bull market helped, because immediately in 2017, when Bitcoin hit 20K, everybody was interested in crypto. And that was a sign for me, okay, I got the data, I got the first results, and there are actually people caring about the crypto space, because I mean, okay, Bitcoin hit 20K, but that was the first moment for me where I realized that crypto is actually a thing, and it's important, and you need to do research in the space, and people are caring about this. And in 2017, there were also first hedge fund. I talked to some in London who were interested in setting up a digital asset business or crypto trading business. And that was the moment for me where I kind of, saw that this space is a really nice new space for asset management, for financial firms, and I want to be in the space. And that's why I focused my PhD thesis totally on crypto from that point on.
That's so interesting. Before I ask you more questions about your PhD, I want to ask you some more questions about the arbitrage opportunities. Because last year, when a lot of decentralized exchanges also launched on, let's say, other blockchains, for example, I looked closely on the Avalanche ecosystem. There were also like arbitrage opportunities. And they also said, like the founder said in some of the videos of the exchanges, that there are currently arbitrage opportunities. And I wanted to know, do you also have insights on this business at the current moment? So do you know how it currently works? Are there like big players, or is there also like an opportunity for, let's say, small retail people like me or students?
You could try, but I don't think it makes that much sense, because what you noticed is, so you are not alone who noticed that there are arbitrage opportunities, but there are also a lot of high frequency market makers. There are a lot of hedge funds, And I mean, these are big firms like, for example, Chain Street. I think they have gone into crypto, or at least explored crypto. And I mean, they have the people, they have the setup, they have the computers, they have everything up and running, they have the experience. And so from what I've been hearing is that a lot of institutionals and very professional investors and market making firms are in this arbitrage space as well. Not just arbitrage, but also market making. And I think that's a very tough competition right now. So for retail investors, or for retailers, I don't think that's the best place to be.
Yeah, probably. And I think it will also not take a lot of time until a big corporation, or let's say a big market maker, will also use this arbitrage opportunity, at least when there's enough money to be made. And as you told us, you worked as a, or you don't told us yet, but you worked as a portfolio manager at both Union Investment and Xayah. And for the listeners who are not familiar with the traditional finance industry, can you explain maybe a little bit what you did in your job?
Yes, so portfolio management basically is about managing the money of other people. And Union Investment is a very large asset manager in Germany. It's one of the largest, I guess, in Germany. And they manage the money of all the individual clients from like regional banks. And the clients of the regional bank, they put their money into Union Investment funds. And Union Investment and also most other asset managers, they have different funds, different strategies, different asset classes they are active in. And the part of the portfolio manager, of one single portfolio manager, is to focus on a specific asset class, like, for example, equities or bonds or commodities or whatever, and to conduct and to manage a specific strategy. And for the largest asset managers, it's the easiest to do long only strategies. And it's the easiest because they have so much volume. They can't go for a small size different opportunities, because then they could just employ a fraction of the capital they have. So what they do is that they are active in long only strategies, like, for example, tech stocks in the US, just as an example. So a portfolio manager would be managing a portfolio of US tech stocks and would make buying and selling decisions for the stocks in this portfolio. So retail clients are investing into the fund managed by the portfolio manager, and the portfolio manager makes the decisions on behalf of the clients. And so the portfolio manager obviously isn't talking to all these single retail clients, because it would just take too much time. But he's managing, because he's a professional, has a lot of experience and knowledge and everything, and he's managing the tech stock portfolio in the best way he or she can. And yeah, that's basically it. So you are tracking the market, you're doing a lot of research, you're doing a lot of research calls with analysts from banks, with people from different corporations, like you would be talking to some investor relations from Apple, for example, or from all the other tech stocks. And then you need to have an own opinion on all these different stocks. And you would also look at the fundamentals of the equities and of the corporates, like go through the balance sheet, go through the income statement, do some relative valuation, peer group comparisons and everything. And then, so that's an ongoing task, because some companies are reporting different numbers in a like quarterly, for example. So they have an update on their earnings, or they publish their balance sheet for the last year, and so so you cover, like, I don't know, 50 or 100 different tech stocks, and you need to know the details of all of these companies. So you would need to know, okay, the balance sheet of company A looks like this, the balance sheet of company B looks a bit different because they have another business, and then you need to also to incorporate the macroeconomic environment into your stock analysis. So, like we have right now, we have rising interest rates, and then you, as a portfolio manager, would need to know of how rising interest rates influence the price of the different companies you have in your portfolio and you are looking to buy or you're looking to sell. And yeah, that's basically the job. It's a very tough job because you need, basically you are working all the time, because I mean, stock markets in Germany at least open in the morning, and if you're working in US tech stocks, then you have to follow markets until the evening, because the close in the US is a bit later than the German close. And yeah, that's a full-time job. You are thinking a lot about the different positions you have in your portfolio, and yeah, you're talking a lot of yeah, a lot about markets with your colleagues, with other analysts, with portfolio managers from other firms and so on, because you are meeting them at different occasions. And yeah, it's a great job. It's a nice job. You learn a lot, and it's not like there is some fixed system or some check boxes which you need to check, and then you have a nice portfolio. The situation changes constantly. So we are in a totally new environment right now. So we have the risk of recession, we have higher interest rates, and then you need to see how this environment impacts your portfolio, because many portfolio managers in my age, they haven't been around 2008, where the last big crash was, or they haven't been around 2001 with the tech stocks crashing and everything. So it's a great opportunity to work in this space, because your day isn't always the same, because the market environment changes, so you need to change and to adapt as well. And for Xaya, which is a specialized asset manager, so they are active in absolute or market neutral strategies, and they go for some of these situations which I mentioned before, which are just kind of too small for these large asset managers, because sometimes there are special situations where, for example, a bond pays you enough money, so in terms of interest or coupons, which you receive by holding the bond, that you can also use this money to buy a credit derivative swap, which is like an insurance in case the bond or the company which issued the bond defaults, and you still have some money left. So that's also credit arbitrage. So in theory, you don't have a default risk because you are hedged by buying the CDS, and the bond you hold pays you enough money to cover the insurance, and you still have some money left at the end of the day. And that is credit arbitrage, and that's highly specialized. It's not a trivial topic, and it's also very interesting, but it differs, of course, a bit from the long-only side. And
Definitely.
yes.
Xaya must have some great opportunities in the current market environment, right?
I guess so, yes. Shaky markets like we have it today, or the last weeks, are a great environment for all special situations fund, for absolute return funds, and basically for all your hedge funds out there.
That's very interesting. And you talked about like covering US tech stocks as a German analyst is a hard job because of the long working hours. Probably being like a portfolio manager at a crypto investment firm with 24 hours trading is probably also hard. I don't know if there are such portfolio managers at the moment, but before you talked about your PhD, which is titled Asset Pricing and Investment Styles in Digital Assets, a comparison to traditional asset classes. And you told me before that it was quite different from, let's say, the traditional equities. or the traditional assets. And can you maybe break a little bit down the outcome of your research?
Yes, definitely. But before that, just a quick note: portfolio managers in the digital asset space, or working for companies in the digital asset space, they are actually working in shifts. Like you have 2 or 3 portfolio managers, and they work the first 8 hours of the day. Then another portfolio manager comes and takes over the shift, so that they cover all of the trading. Yes, but you need to do it, because there's no other way. Crypto is so volatile, and you can't just go home and in the 16 hours of the day which you're not working, it's the crypto crashes, and you're just sitting at home and watching how crypto crashes, and nobody's doing anything. So you need to have somebody covering crypto all the time, and it really makes sense. But yeah, regarding my PhD thesis, it's about asset pricing. It's about investment styles. Investment styles is like a more academic term for investment strategies, and what it's about when comparing it to other asset classes. So for me, the thing was that when I did the first calculations, like you have these the size effect in stocks, you have like a momentum effect in stocks, and different other things, and you try to do it in crypto, and you see that at first you have totally different returns, average returns, because in stocks, so I don't know, the long-term risk premiums, or the average or long-term average return by just buying and holding like a large index of stocks in the US, for example, would be around 8% per year or so. And when you look at the same numbers in crypto, it's more like, or at that time, it was clearly higher. And you're thinking, oh, what's going on here? Is that even correct? So do I have some kind of a calculation error, or did it make another mistake, or why do these numbers differ so much? And that was the first thing I noticed when doing research on crypto, that you have returns which are a multiple of the returns you know from equity markets. And by doing so, so if you go deeper into the research, and if you have more and more questions which you want to answer, then you will see that if you get the results and there's nobody else who did the same analysis before you, you don't have a reference. So you don't know, is your result right or is it wrong, because you can't compare it to anybody else. And that was the problem I had. So I was doing the calculations, I got the results, and I said, oh, that's interesting, but is it right or is it wrong? So I talked to my professor, and he also didn't know, because there was nobody else who did the analysis. And that's how you need to work on this new and emerging topic. You just need to do it step by step, thinking and making sure everything you did is correct, and you don't have like a silly error in your codes. And yes, that's very interesting, because you have different results in crypto, like for example momentum, which I mentioned, which is a very strong characteristic, we term it in academic research. It's not actually that strong in crypto. That's very interesting, because momentum basically tells you if a stock performed very well the last year, it's very likely that it performs very good in the next year, or not year, but for example, next month. And also the other way around, if you have a stock which was the loser compared to all the other stocks in an investment universe, then it's very likely that it continues being a loser in the future. And for crypto, that's not true, because in equities, you use like a 12-month momentum, and it's very well documented by a lot of researchers and in a lot of studies. But if you do the same analysis in crypto, then yeah, you will see there's no momentum. It's just boring, because you can then, what you would be doing is like calculating the mean average return of a long portfolio. That means you're going long all the stocks with the highest momentum, and on the other side, you're shorting all the stocks with the lowest momentum and building a average between both, or in this case, the difference between both portfolios, the returns of both portfolios. And then you have a number like 1% per month on average is the return of this momentum strategy, where you go long the winners and you go short the losers. And if you do the same in crypto, going long the winners and going short the losers, based on the 12 months momentum effect or momentum indicator, then you'll notice, okay, it's just like zero, or there's no statistically significant return differential between both portfolios. And so you would term that, or you could say that there's no momentum effect in crypto. And yeah, you could go through a long list because I think researchers have explored like more than 300 different stock market stock market indicators or stock market characteristics. And you could do pretty much the same for crypto without all these balance sheet information, because there's no balance sheet in crypto. And I think for most of the indicators, you will get different results. And that's the interesting thing, because equity markets have been covered a lot by many, many researchers all over the world, but not in crypto. And so if you're a researcher, then looking at crypto is very interesting, because the likelihood that you are one of the first to explore a new effect is very high. And that's what it makes so interesting in working in the crypto space.
That's fascinating. And I'm currently thinking about what you told me about the momentum and maybe also the root causes why this is not the case in crypto assets or in digital assets. And I was thinking about Warren Buffett at this moment, because I like value investing in stocks. And I also think, or I have the hypothesis that there's some kind of value investing in cryptocurrencies. For example, if you analyze how many developers are, for example, working on the Ethereum blockchain or on the Solana blockchain, or for example, if you have like a NFT project, like the Bored Ape Yacht Club, and they have like the percentage fees on OpenSea, the project also has some kind of cash flow. I first wanted to ask you, what's your opinion on this hypothesis? And maybe also, do you have an idea why there is like no momentum in crypto asset? Is it because they don't have this company behind them, and it is not like something in the most cases which generates cash flow?
So regarding the value hypothesis in crypto, it's like it's a bit difficult to arrive at a value premium, because how do you measure value in crypto? You don't have balance sheet information, you don't have income statements. That makes it pretty tricky to look at different valuation methods, which you could use from equity markets, for example. But there is so you could use like developer activity in different crypto tokens, but there are also information on hash, the network activity, the hash rate, difficulty of hashing or of mining a new coin, and so on. And you could use that information as well. And I think there's one academic paper which is looking into this topic, and I think it's a researcher who arrived at the conclusion that there's actually a value premium in crypto markets by using all these on-chain characteristics. I did the same in my PhD thesis, and I didn't arrive at such a conclusion. But I used an older data set, and the paper which I mentioned has a Yeah, a newer data set with a lot of more data because my data was ending in 2018. And I mean, every year you have more data, so it makes sense to incorporate it into your analysis. And yeah, this researcher arrived at a crypto value premium. And I mean, we do kind of the same with crypto meta. So we are we have data on developer activity, we have data on Reddit activity. You could also say that all the people on Reddit who are the social network of a coin or of a crypto project could also be termed something like a value indicator. And we have the data, and we also um, calculate these strategies, which I mentioned by going along the coins with, like in this case, a high developer activity and shorting coins with a low developer activity. And we do it for all our indicators, constructing these strategies. We have more than 90 indicators, but for now, I don't know the results for example, developer activity or social media like Reddit activity. I would have to look that up, but that's very interesting because, yeah, we have, as I said, more than 90 indicators, and we stored in the database, but we don't actually use it right now. But in the future, that may be some interesting perspective we could offer for our clients or for people visiting the web page, that you can see which characteristic actually is a very interesting, or let's say a very good characteristic to look at this point in time.
Yeah, I think this would be totally interesting for me also as a crypto investor, because I always like data, but even more like, let's say, refined data where you can give me some kind of, let's say, action um, recommendations which I can do. And for example, also in the normal asset markets, there's are these beta factors, I think they are called, where they are telling you that small companies often outperform larger ones, and others say these factors do not exist anymore because of arbitrage opportunities. And yeah, I would be totally interested in what works in the crypto world. And I personally, I also check out Twitter. I look at GitHub, because I think at GitHub you can also see like the number of developers and also contributions. Probably you meant the same, right?
Yes, on GitHub you can see how many people start a different repository. So it's like basically like a like button for developers, and you can also see how many pull requests have there been for this project, how many requests have been merged, for example. And we have a lot of this GitHub data in our database as well. And we also have different data on Reddit activity. We have Reddit comments. We have Twitter followers. So that would be, you could term that like a value characteristic in crypto. Yes.
Nice. And you talk now a little bit more about crypto matter and also what you do, but I'm interested in how did it all come to be founded?
During the COVID crash in 2020, we were working a lot at Xaya. So we had long hours because there were so many opportunities. And yeah, at the same time, some of my colleagues and me, we were looking at crypto very actively because it's a very interesting asset class. Also, if you are active in crypto privately, and as a professional investor, you are most of the time using Bloomberg. So Bloomberg is a like a tool, a computer program or app, which gives you access to global financial markets. So you can have data, you have a lot of charts, you can do a lot of different analysis. So you could, for example, get risk contribution of one single stock to the whole portfolio, for example. So it's very nice tool. It's very professional. It's very sophisticated. But for crypto, it's like, yeah, I was missing a lot of information for crypto projects or for crypto in general when using Bloomberg, and that was the time when I kind of got the idea and where I was thinking about starting an own business. So because I thought that there is this gap because every financial professional is using Bloomberg, but for digital assets, you can't do that much with Bloomberg. And that's what I was, or that was a question for me. So how could I get the results that I obtained from my PhD thesis? And how can I combine it with my practical experience to get a nice product for crypto, which actually is, I would term it a mini Bloomberg for crypto. So we have data as well for just for crypto. So we are focusing on crypto only. We have different tools which you can use to analyze your crypto portfolio, for example. You can go for correlations. We have seasonality. You can also screen the whole universe. So we have more than 20K coins in our data set, and you could use different characteristics, which we also discussed before, to screen the whole 20K coins. And then, so that's basically the first step in an investment process to identify different coins. And so different coins you would like to buy or you would like to sell because you would be short or you have it in your portfolio, but you're thinking about selling. And that's what we are doing with Crypto Matter. We are covering the whole investment process, and we are focusing only on crypto and getting all the data. As I mentioned, we have, for example, data from Reddit. We have closed prices, we have market cap. So that's the really basic stuff. But we also go into like more specialized things like a short-term reversal. And short-term reversal is more or less the opposite to momentum, because reversal in general tells you that you would be going for coins, in this case, in the digital asset space, for coins which were the losers in the last time, because they are very likely to be winners in the future, and you would kind of short the winners because reversal tells you that the winners will be the losers in the near future. And you can use these different indicators to cover your investment process, like selecting the coins you would like to trade, so long or short. And we also use, for example, seasonalities, which tell you the best time to do your trades. And then that's what I mentioned also is like doing some kind of correlation analysis. So if you have already 10 coins in your portfolio and you're not sure if it makes sense to add another coin, then you could go for a different. So you could do a correlation analysis, and then it tells you, okay, this coin which I'm looking to add is highly correlated to all the other coins. So it actually doesn't make sense to have it in the portfolio right now. And that's basically. So you can do a lot of more things with Bloomberg, but for crypto, it's very sophisticated. We're just focusing on crypto, and we will add some more functionalities, and we are also talking to different potential and existing clients of different new tools they're looking for. And so we are working on the product all the time, and it's fun because as I said before, if you are in crypto, you have some results and you just don't know, is it right or is it wrong? Because nobody else has done it before, and that makes it so interesting.
Yeah, totally. So you're bringing traditional finance to the crypto world.
Yes, yeah, definitely.
And you were talking about Bloomberg. Are you also planning, like, let's say, our function where people can trade cryptocurrencies with each other, or maybe even professional clients?
So we are not an exchange. And we are not a broker, so no, we don't plan it yet. But I mean, if there's demand from the client side, then sure, we can think about it, and perhaps we can also. So it takes some time to develop all these tools and functions, but if there's enough demand and clients talking to us and saying they want or they need to have it, then sure, why not?
And currently, your platform is priced at 20 euros per month, and it is aimed for retail investors. And I wanted to ask you, how did this decision come about?
Yes, so basically the 20 euros per month is for retailers only, and we had a lot of interest from institutional clients, and so we will also launch a professional version of our tool, which has some more functionalities, and you can do different, more sophisticated things, like adjusting different settings or values in the analysis you're doing, which is actually needed by professional clients. So we are splitting it up again a bit, not again. We are splitting it up a bit to make it easy for retailers to use, and also to make it as sophisticated as needed for professional clients. And so that will be the two versions of CryptoMeta. But the reason, so the initial idea was really to develop it for retail clients, because I mean, in the time when I was portfolio manager, and also before COVID hit, we went to different parties, and you were socializing a lot, because it was still allowed at that time. And one of the first questions if you meet somebody new is, how are you? What's your name? And where are you working? And when I was telling people that I'm working as portfolio manager, doing money management for large corporates, then they always told me about their positions they have, and was asking me, does it make sense to buy this stock right now, or should I sell the other stock? And that was one of the questions. And also in 2019, I think we had some defaults, like Thomas Cook was going bankrupt. We also had Wirecard going bankrupt. And I mean, with Wirecard, it was obviously fraud, but people were trading Wirecard a lot. And also people which I wouldn't expect to trade a distressed name like Wirecard. And so there were a lot of stories where I heard about people who lost a lot of money just by buying this Wirecard stock, because they thought, oh, it's like 40 euros right now. It was trading above 100. It makes sense to buy it now. And they bought it. And yeah, we all know how it ended. So Wirecard was totally bankrupt. Stock went to like below €1. I don't know if it's even listed anymore. And yeah, I had a lot of guys telling me that they were buying Wirecard. And that was the point for me where I recognized, okay, if you're buying into, like, let's term it difficult names or difficult situations for companies where you actually have a balance sheet, where you have a lot of analysts covering the name, where you have a lot of media attention, how do you trade crypto then? Because you don't have so much analysts looking at different crypto projects, you don't have the media attention, and valuation of digital assets is for people not deep into the space, it's a really difficult thing to do. And so that was the intention, to help retail clients who are active in crypto to set up like more or less professional and also sustainable, not in the sense of ESG, but economically sustainable portfolios, where you don't need to fear that you will lose all your money the next day, but where you use a structured process, where you have this process guiding you through the steps you need to do, like a professional money manager would do, to arrive at a portfolio which is diversified, which is robust in the sense that you buy into different assets. With different assets, I mean, like from different categories, like from different cash algorithms, and also different functionalities, for example, and where you also don't have too much weight in one coin, because I mean you can have like 20 coins in your portfolio, but if one coin has a weight of, let's say, 95%, then your diversification doesn't help you a lot. And so I had this structured process in mind, help retailers guide through through their investment decision making to arrive at a portfolio which they are actually feeling good about. So where they can say, okay, I can. For me, it's okay if I don't look at the portfolio the next 2 weeks because because I know that there's nothing bad happening in that time. So if I look at the portfolio in 2 weeks' time, then there's a high likelihood, high probability that I didn't lose all my money. So like people did with Wirecard, and that was the idea for CryptoMeta in the first place. But now we also got a lot of institutional interest, and that's why we split it up into two versions. So the retail version is kind of the initial idea, and the professional version is like the subsequent development of our platform.
It's very interesting. And I was currently thinking about the portfolios you can create on your platform, because I also tried some portfolios out. And let's say I have 50 cryptocurrencies, and you can give me the perfect, let's say, portfolio allocation for maximum return, and for also for other categories. Um, what I was thinking is, does it involve also the fundamental values of cryptocurrencies as we talked before? Like the number of developers, is there also like a possibility where I can say, okay, I only want to make a portfolio where there was like high developer activity and a growing number of developers?
So that depends on the user of the platform. So if you are looking for such coins, especially like for coins with high developer activity, then you would select like just screen the universe by using this criteria, like you want to have high developer activity on GitHub, for example, and then you get the list back from our screening tool, and then you can see, okay, I want to invest in the first coin and the third coin and in the 10th coin, for example, and you would then use these coins and add them to your existing portfolio. Like you have some different other coins you already bought into, and you put it into our portfolio optimization framework. And there, as you mentioned, you have different choices. Like you want to have low risk, or you want to have the highest possible Sharpe ratio, or you want to have like a risk parity approach, and then you have the data or the criteria you're looking for, at least indirectly in your portfolio. But you could also do it like some kind of a ETF strategy. We're just buying the coins with the highest developer activity. And there's also another thing which we don't have on the platform yet, is that you can incorporate this information of developer activity directly into the portfolio weights. That's a very sophisticated approach, and I don't know if many people not from the finance industry will understand it directly. So I think it would be something more like for professional clients. But you can also use some different frameworks where you incorporate the information from different indicators or characteristics into the portfolio construction process directly. And that's possible as well, but we haven't done it yet.
That makes totally sense for me. So I first, let's say for me, I think there are some like fundamental values which might be the, let's say, balance sheet for cryptocurrencies, even if it's not the balance sheet, but let's say the number of developers, the number of activities, the community activity on Reddit, the Twitter followers, maybe also the applications in the complete ecosystem. And I search my coins based on that. And then I take like the 20 or maybe even 50 coins and put it all in your portfolio builder or however you call it. And then I can get my maximum return portfolio balance over crypto meta.
Yes, that's totally right. That's the way we are mentioning how you should use the platform, and it so the final decision is with you. So you need to say, I want to buy this coin, and so at this point, if you decide to buy it, then we can't do anything else for you, because then you would go to your exchange accounts you have at, I don't know, Binance, FTX, and all these crypto exchanges, and you would actually buy it into your portfolio. So the investment decision process is finished at this point, and you are implementing your decision into your portfolio. And that is totally how you should use, that's the way we imagine how you should use CryptoMeta, the platform. Go through the universe according to your criteria. We can help you with the criteria because we have all the data, we have the experience, we have the knowledge of how to look at the indicators and characteristics. And then you can run different analysis, like looking at different correlations, for example, or seasonalities. And in the last step, you would go into the portfolio builder, choose a algorithm which you're looking for, like low risk, high return, or what else. And you get the weights, you get something like a small backtest. Then you can see how the portfolio would have performed in the past, and you get some other data. And if you are happy with the results, then you would leave our platform and actually implement this decision into your portfolio.
That's very cool. I really like it. And I think now I also have like fully understand your platform, how I can use it for myself. And I want to ask you also if you're comfortable sharing. Do you also invest yourself in cryptocurrencies? And if so, what criteria is your investment decision based on?
Yes, I do invest in crypto, and I believe in the long-term success of crypto and also in the long-term value which crypto and blockchain provides for the economy and also for humankind, as you could say, because the idea of decentralization is, if you think about it, it's just awesome. And so I believe in the long-term success, and to participate in this long-term success, I have like a core satellite approach. And the core portfolio is that I just buy every month a specific amount into the largest coins, which is obviously Bitcoin, Ethereum, and all this stuff. And then so I don't sell it, I just hold it for the next, I don't know how many years. I didn't sell in this downturn we saw the last weeks or last months as well. So I kept all my holdings, and I'm adding new holdings. And on the other side, on the satellite portfolio, I'm doing more opportunistic stuff because I have some kind of background in special situations, distress situations from Xayah, and so I was pretty active in Terra Luna, but it's not a long-term position. Just looking at the coin, at the prices, of how the volumes are, of how the sentiment is, and doing some long short trades, doing also airdrops. So there was this new Luna which was issued by the Terra Luna project, and I'm also I've also been active in Shiba Inu meme coins, and that's more like a trading approach. So I don't hold it very long. I try to to make my best as a trader, even though I don't have enough time at the moment to look at the markets 24 hours a day. But I'm trying. And on the other hand, I have this core portfolio where you don't need to think a lot about it, because it's all executed automatically. So I have like a fixed date where I buy the coins, and it's always the same amount. And it runs automatically. And so I'm playing around with the satellite portfolio, where you can do a lot of interesting things. But the core of the portfolio is very long term oriented buying approach from my side.
Very interesting. So I hear from this that you're bullish on the future of cryptocurrencies.
Yes, definitely. I mean, we have this crypto crash, and many are thinking about the new crypto winter. And it might be that we see a prolonged period of time with lower crypto prices. But if you look at the history of crypto and of Bitcoin especially, then you can see that there have been some more crashes in the past. And these crashes have been like minus 80, minus 90% from the last all-time high. So that's the drawdown. And so it's not the first time we are seeing such a volatile period with lower crypto prices. And it's actually a good time to buy into crypto, I think. So it's not a specific advice. But I think if you are looking, or if you have been thinking about buying into crypto, then now might be a good opportunity, because Bitcoin at 20K, you have a lot of other different projects which are trading at kind of distressed levels. And so if you've been thinking about adding or going into crypto, then now might be the time for you to actually do it.
That's some very optimistic words for the end of the episode. Thank you very much for answering these questions. I'm very excited to check your platform out, or even more out, and even look how you develop the platform. And yeah, so thank you very much.
Thank you too. It was great fun. Thanks.
Thanks for listening on today's episode. If you liked the podcast, you would really help me by recommending it to your friends, because the thing is, podcasts don't get really any organically reach, and I'm reliable on the community to build a community. And yeah, I would really love if you maybe have someone who's interested in Web3 and also listens to podcasts, if you share this podcast with them. I'm also always happy for feedback. So the best way at the moment would be probably over LinkedIn. So maybe you have some recommendations for me. Until then, have a nice day. Cheers.